Alright, I just logged in the backtesting software right now. This is the new session that I'm creating. So I have an account balance of $5,000 on NQ Futures. The starting date of this backtesting session will be on January 1st, 2025, all the way to now. The strategy that I'm going to use is going to be the inversion fair value gap strategy. This is my entry model, but the framework I'm going to use to take my trade is the framework that I use in all my other videos. So either the 15-minute fair value gap bounce, or I'm trying to trade back inside an unfilled 15-minute fair value gap. I'm going to show y'all in a few minutes, but the name will be 2025 backtest. So here we go. I'm going to start the session right now. So I'm going to take a look at this 15-minute chart right here. I have a 15-minute bearish fair value gap sitting right here, and also an order block. So right now this is my area of interest to look for potential shorts. Right now we just digged into this 15-minute bullish fair value gap, but we disrespected it a little bit, so I'm not looking to trade back longs inside this unfilled gap. Okay, also we closed super strongly below those lows, so I'm not really looking for any potential reversal right now. So I'm going to take a look at what price is going to do when we bounce from that gap. So right here we are bouncing from this gap on the 1-minute chart. This is when I can scale down to the 1-minute chart, 1 2 3 5. So right here we tapped it and we have a rejection of that high. Now if we see some signs of weakness here, I could trade back inside the internal gap. So right here, this is exactly what I want to see. We tap this 15-minute bearish fair value gap right here, and then we have signs of weakness at the highs. So right here we have a big fair value gap, which is telling me that the buyers are located between this candle's low right here to this candle's high. So this big gap right here is the area where buyers should have held, okay, to create a new high. But right here we're disrespecting the zone, so we have a potential short opportunity back to the downside. So this is where I will take my short back towards the internal gap here. Okay, so those internal gaps on the 5-minute chart, and I will go for a 1-to-1 risk to reward. I will put my stop loss right above this body right here of this candle, and this is where I will take my first position. I will risk 3%. I will risk 10%, which is $500 of the account. So limit order, let's get right into it. And as you guys can see, in a few minutes we hit our target. So the play here was a 15-minute fair value gap bounce. All right, we bounced from a 15-minute fair value gap, then we couldn't close above this 15-minute fair value gap. We then disrespected the 1-minute gap where the buyers were located, so I took a short opportunity right back into unfilled gaps just below us. So that's the first trade. That puts us in a realized P&L of $500 for now. Let's keep going. So now we just created that bearish fair value gap on the 15. This is also a potential area where I would like to take shorts from here. So we have a 15-minute gap here. Do I have the 3-minute? This is such a small gap, so I'm not going to use it. I'm going to wait for the 2-minute here to get disrespected, because I really like how we are reacting from those highs here. All right, I think if we disrespect this gap here, this is where I will go short. Yeah, exactly here. So I'll go short, stop loss right above this high, targeting a 1-to-1. So I'll put a limit order because we're kind of far away. I didn't get picked up here, unfortunately. So here I try to take the shorts off of that 2-minute inverse, but I couldn't get filled on that candle. I was being a dick for a tick, but I'll take that. It's not that big of a deal. So here I could potentially play shorts from this high if we reject it aggressively. What I'm really looking for in this backtesting session is looking to take really good setups and not force anything. So using the same kind of framework I'm used to, but I'm gonna pass on some setups that I judge being a little bit less probable. So right here, we are bouncing from a 15-minute fair value gap right here, but I don't really like this formation because we just swept this internal low. I would have liked if we disrespected this gap and found an entry here on that 3-minute chart. Unfortunately, we swept this internal low, so I'm not looking to get into that short anymore. All right, so we do have a 15-minute fair value gap just right here. As you guys can see, we have a 15-minute fair value gap sitting right below this low. I dragged this box, it was pretty far away. So once I sweep this internal low that already filled the gap, I will be in a possible long opportunity because we just displaced down super aggressively right here from this candle. And if we reject this low here, we will form an unfilled 15-minute gap. So this will act as my drawn liquidity and as a magnet for a future target. So now I'm going to scale down to the 1-minute chart and see if I can find something. Can't find anything here. We just swept this low though, which is pretty nice. And we are displacing back to the upside. This candle will most likely close bullish right now just by seeing the wicks here, and we will have an internal gap right above it, which is going to be the target most definitely. So I will look for a potential inversion for value gap inside this range if we can have one. Too much chop here, so I'm just gonna wait for this fair value gap to get filled exactly like here. So this gap gets filled. Let me see what I can do here. If I can take any shorts back to the downside. This is a nice 3-minute fair value gap right here. If I disrespect it, I think we could go down for a 1-to-1. For X, we went up again. We held that fair value gap. So here, this is where we disrespect. This is where we disrespect that 2-minute fair value gap right here. I don't really like this range, I'm not gonna lie. This is the type of play that I don't like to take when it's scuffed. The gap is pretty small. I don't really like this play. I will just pass on it. Of course, you guys could take it, but those kind of plays, I really don't like to force trades when there's a range like this with a lot of highs and lows created on the 1-minute chart. I just prefer staying out of that trade. Right here, let me see what happens. We have a 15-minute order block right here paired with a 15-minute fair value gap. So this could be a nice area of interest for possible shorts. So really nice here. Perfect. So we have a high sweep, so a buy side liquidity sweep on the 1-minute chart right here. And then as you guys can see, we have a 3-candle pattern. So 1, 2, 3, which is the leg that created the sweep, has only one singular fair value gap, which tells me that the buyers are located between this candle's high, this candle's low. And if we were truly bullish, we should have respected this zone to create a new high. But right here in this case, we disrespected that bullish fair value gap, which tells me that the shorts are the one controlling the market and that the buyers are getting squeezed. So right now I'm going to look for a short opportunity on the pullback inside this inverse fair value gap, and I will then go for a 1-to-1 back to the downside. So right here, I will wait for a pullback here and then we'll go short. Let's take a look at what's going to happen. And in 2 minutes you hit your target. So right here, what I like about this trade is that we had more than one confluence. We tapped a 15-minute order block right here. As you guys can see, we tapped this order block, so the body of this order block. Then we also had this 15-minute gap, so 2 higher time frame PD arrays. Then on the 1-minute chart, this is something also that I really like to see when we cannot close a singular handle above the buy side liquidity. Once we have this, I know that it's a strong confirmation that the buyers are being squeezed and that the sellers are the one controlling the market. And absolutely here, this is the perfect confirmation. We had the 4th candle after the fair value gap creation that disrespected the gap, which is, in my opinion, the strongest possible confirmation. You have 1, 2, 3 candles creating the fair value gap, and then the fourth disrespects it. So this is, in my opinion, one of the best entry models that you can ever take, the fourth candle inversion fair value gap, which is also the V signature. So right here, another trade I caught right here. Let's take a look at if we have other possible opportunities. So I already took 2 trades and it's 337, so I'm just gonna go in the next day. Right now we just swept buy side liquidity right here. Let me just put that line like so. We have buy side liquidity right here into a 15-minute bearish fair value gap. So right now, if we do react from this buy side liquidity pool and that fair value gap, I will possibly look for shorts. Right, so right here, a nice push to the upside. I would not try to short that anymore because we pushed above this 15-minute fair value gap, plus we almost created equal highs. So right here in this case, the higher time frame drawn liquidity becomes those highs, so I'm not looking to short that anymore. Right here I have 5-minute fair value gap bounce, not really looking to get into that. So that's really good. We tapped into this bullish 15-minute fair value gap. Let me take a look at the reaction from this gap right here to see if we have a possible opportunity. What I like right now about this setup is that we cannot close a singular handle below this low here, which is the sell side liquidity level, which tells me that the buyers are currently super strong and that the sellers are being squeezed right now here inside this range. So I will look for a possible long opportunity inside this leg if we have a 1, 2, 3, or 5-minute fair value gap. So right here we have a 2-minute fair value gap. Okay, couldn't really enter here. In this case, I'll look for a possible long if we have a nice inverse here on this 5-minute fair value gap. If we do have one, I'll try to take it. So boom, right here. What time is it? 28. So if we do close above this fair value gap, I will take it. We don't. So unfortunately, I cannot take this long. Right here, we do close above it, but don't quite pull back. So this is just a trade that I wouldn't really take. So we have a buy side liquidity sweep right here, which is pretty nice. I will look for possible shorts. Most of the time in this exact situation, buyers are being squeezed right here and responsive sellers are starting to step in the market to then fill the inefficiencies, so the internal fair value gaps. So in this case, I will look for potential shorts if we have an opportunity. So right here we had this down close candle on the 15. We led this 15-minute fair value gap after the buy side sweep. So right here, this is a really good confirmation that this internal fair value gap will most likely be taken out. So let me look for a possible short opportunity here. So we do have, this break of structure to the downside. I'm not really using an inversion for value gap right here. I'm more using the unfilled 15-minute gaps for my entry model right here. I will take a stab at a short opportunity right here inside this break here. Stop loss right above this internal high, targeting the unfilled 15-minute gap. I think this is a really good play. After the buy side sweep, we couldn't close a singular handle above this high. We had a down close candle on the 15 and we let this inefficiency right here on the 15-minute chart, which tells me that price will be most likely attracted to this internal 15-minute bullish fair value gap after sweeping external range liquidity. So right here, we just broke structure to the downside. This is where I will take my short on this limit order right here. Let's take a look at what's going to happen. So I'm getting filled here. And as you guys can see, in a few minutes, I hit my target. So the play here was a buy side liquidity sweep. And then we had a nice down close candle on this 15-minute chart, that created this internal 15-minute fair value gap. Here, what I'm telling myself is, what are the odds of us not returning back inside this 15-minute bullish fair value gap after sweeping buy side, considering the fact that we couldn't close a singular handle above this buy side liquidity level. As you guys can see right here, we wigged this high perfectly and then we started to go down. We created this 15-minute fair value gap with this low, and then we held around those highs, broke structure to the downside. So this is a really good short play to scalp this internal fair value gap on the 15-minute chart. So this is the third trade I took in this session. Really good trade again. I think we could find a possible scalp long here since we're bouncing from a bullish 15-minute gap. But as you guys can see, this was not a trade taken based on inversion fair value gaps. This was a trade based on this internal breaker on the 1-minute chart, back towards a really good inefficiency here that had to get filled. So I'm gonna go ahead and go to the next day open. Right here, we didn't have any more trades. Marking out this 15-minute fair value gap right here also, which tells me that this buy side liquidity is in play once we sweep it. So right now I'm looking to get into some possible shorts if we can. So right here, let me see. We are reacting from a bearish 15-minute fair value gap to the left right here. We are above this buy side liquidity level. Yes, we broke above it, but right here we have an internal 15-minute bullish fair value gap. So if we can't close above this candle's high right here, it will tell me that on the 15-minute chart, the buyers look pretty exhausted and the sellers are possibly winning this battle right here. So then I will look for internal confirmations and weakness at those highs here to trade back inside this unfilled 15-minute fair value gap. So let's take a look at what's going to happen right here. We already have a breaker on the 1-minute chart, which is possibly a really good entry, but let me look for something even better than that, which is right here. We have a potential breaker opportunity again at the open. So right now, the framework that I'm using here for this play is the fact that we just wicked this buy side liquidity pool, so the 15-minute high, and we closed back inside the range, letting this unfilled 15-minute fair value gap. If we have a fair value gap here after a buy side liquidity sweep, most of the time sellers will start to step in to fill this inefficiency. So right now, if I go down to the 1-minute chart right here, this is what I like seeing. I like seeing highs, lows, higher highs, higher lows, and then a big break. So here, high, low, higher high, lower low. So we have that change in the state of delivery. This is where I will take my short opportunity with my stop loss right above this high, targeting this unfilled 15-minute fair value gap. Let's take a look at what's going to happen here. In a few minutes, I hit my target right here inside this candle. So again, yet another win. So the framework I use is pretty simple. Unfilled 15-minute gap when we cannot close above buy side liquidity, and the buy side liquidity I use inside this range here is the previous candle's high. So this was another trade you could have caught here. I went on the next day right here. So January 7th, we have buy side and sell side sitting right here. We also have a 15-minute gap above and below. So I will try to play the extremes here. Let's see what it does. Okay, I really like what I'm seeing right now. Because we had a nice displacement candle on the 15-minute chart. And when I see this, I know that we are possibly going to form a 15-minute fair value gap. And 15-minute fair value gaps after sell side liquidity sweeps are most likely going to be filled, and unfilled gaps act as magnets. So right here, in this case, if we have a potential long opportunity inside this candle, it will possibly be respecting the power of 3 of this candle right here. So the open low, flip, and as soon as this candle will close, it will possibly go back towards the internal unfilled 15-minute gap. So right here, let me see what's going on the 1-minute chart. This is great. So we have a sweep of sell side, and then we have a V signature entry. So what is a V signature entry? It is when the 4th candle after the fair value gap creation is the candle that will disrespect the fair value gap. So let me show you here. We have 1, so this is the first candle, this is the second, and this is the third. All right, So after this third candle got created, which is what solidified the fact that we have a fair value gap, a bearish fair value gap created on the 1 minute chart, the fourth candle prints and closes right above this fair value gap, which is not something we see too often. This is really a confirmation that, buyers are really strong. So in this case, since we display so hard right now, we opened lower to sweep this 15-minute low. If I am right about this inversion fair value gap and this candle will close bullish, we will form a 15-minute unfilled fair value gap, which will be my target. This is my framework behind the trade I'm going to take right now. This is where I will put my entry. Even if I wait for the pullback to this inverse, I'm already in a scenario where my RR is above 1-to-1, so I'm not going to wait for a pullback. If I try to go for this internal high here, I will be in a 1.2 risk to reward scenario. So this is where I would go in. And here I hit my target. So as you guys can see, once we display super hard right here, we will most likely form a 15-minute fair value gap. If you see this candle printing a big displacement candle below a sell side liquidity level, if the new M15 candle opens lower and then starts to flip above the opening price, this is most likely a candle that will close bullish, so you have a possible long opportunity to the unfilled 15-minute bearish fair value gap. Right here we have a really good scenario. We just swept this internal low back inside this 15-minute fair value gap and that swing low right here. So we swept sell side, tapped into this bullish 15-minute fair value gap. So now if we are truly bearish, we should respect this bearish fair value gap to create new lows. But if we're bullish, we will disrespect this gap and see higher. So right here, this is where I disrespect this gap. So I will wait for a pullback towards this order block right here, which will be the PDA rate that I'm going to use here, plus the inverse, and I'm going to target a 1-to-1 risk to reward back to the upside. Let's see what it does here. Limit order. And right here, I don't even get filled, unfortunately. Wow, unfortunate. But right here, this was a nice possible trade you could have caught. Wasn't in, unfortunately, but let's take a look at another possible opportunity we can have here. So we just swept this buy side liquidity pool inside this 15-minute bearish fair value gap, a whole lot of accumulation, so could be a power of 3 scenario. Now I'm gonna go to the 3, see 2, we have a gap here on the 2, right here a nice gap on the 3, so this is the gap I'm gonna use. Really nice confirmation so far. We cannot close a singular handle above the buy side liquidity level. So right now, if we have an inverse, it will be really nice. This is the V signature again. So this is where I will go short, stop loss right above this high, targeting the most recent low right here for a 1-to-1. Why do I like this trade so much? We swept buy side liquidity, cannot close a singular handle on the time frame I'm looking at, so on the 3-minute chart. Then the leg that created the sweep has only one singular fair value gap, which tells me where the buyers are located. If we're truly bullish, we should respect this fair value gap right here to create new highs. But if we're bearish, we will disrespect it aggressively to see some downside, which is exactly the confirmation I get here. This is where I will go short, market, stop loss right above this high, and I will target the most recent low for a 1-to-1. So as you guys can see, this is what I call an A+ setup. Why? Because if you cannot close a singular handle above the buy side liquidity level, and then you have a V signature inversion fair value gap, which is the 1 right here, 2, 3, 4 candle pattern. So as soon as the fair value gap gets created, the 4th candle disrespect the gap, which is the best possible order flow confirmation you can get. Again, this is a really good trade. This is the 6th trade or the 5th trade I took right now so far. 1, 2, 3, 4, 5, 6. So 6th trade I took, no losses yet. Let's keep going. Only using the 15-minute fair value gap framework. Just swept buy side right here into this 15-minute gap. Went down and not see anything clean here. I'm gonna keep going right here. So we have a 15-minute bullish fair value gap. I could potentially play a long here, so no longs, but I do have a buy side liquidity pool sitting above me and a 15-minute bearish for value gap. So this buy side is in play for reversal if we can reject it. So right here, really nice, and boom. Wow, this is a really good confirmation. So this is not a V signature like the A plus V signature, but this is still a really good one. So we have 1, 2, 3 candles forming the fair value gap, one accumulation candle, and the 5th candle displaces right below it. So this is a nice short opportunity. I'll put my stop loss right above this high, and we'll target a 1-to-1 here. So I'll take this. What I like about this trade right here is the aggressiveness from the sellers. Once we tapped into this 15-minute fair value gap, that tells me that, all right, the sellers were prepared for that move. The buyers are being squeezed absolutely inside this range. So this is where I will go short. Let's take a look at what happens. And as you guys can see, in a few minutes, you hit that 1-to-1 mark. Of course, it could go lower. You know, it could start hitting those, those internal lows right here, but I'm not looking for something that will yield me more than 10-20 handles in a day. I'm looking for something that is really consistent and that could work in all market conditions. I'm not really looking to get into trades that, forecast the market too much. I'm like to scalp, so this is what I like to do. I'm gonna stick to what works for me, that's for sure. So right here, I already took a trade here and it's 3 p.m. This is where I will go to the next day open again. We could potentially see a nice long opportunity since we have a fair value gap that is going to be created when this candle will close. So we had a nice displacement candle on the 15. This is the candle, the third candle that will create the fair value gap. So if this candle shows aggression back to the upside, this will most likely be a good trade because you will have an unfilled 15-minute fair value gap once this candle will close. So let's take a look at what's going to happen here. Right now we just filled the entirety of that fair value gap. So we have a gap here that we could potentially look for either a short or a long back inside this gap. So boom, right here we're still inside this 15-minute fair value gap. So as you guys can see, we are still inside this 15-minute fair value gap. We are respecting the body of this order block, which is similar to a trade that we took earlier together. Tap this order block, then let me scale down to a 1, and really good confirmation. This is 2 gaps on the 1-minute chart, so let me go on the 2, and this is right here a V signature if I'm not mistaken. Let's take a look at what's going to happen right here if I close. So right here I do close right below it. So again, this is the type of confirmation you guys should be looking for. On the 15-minute chart, we have a gap here that we're holding right now. We tapped this 15-minute order block. We opened higher, so power of 3 of this 15-minute candle right here. So then you guys see this 4 candle confirmation. So this fair value gap gets created 1, 2, 3. And the 4th candle goes and disrespects this fair value gap. So this is a really strong confirmation that the buyers are being squeezed and that the sellers are the one controlling the market. So you could go short right here, stop loss right above this candle right here, and we'll trim for a 1-to-1. So this is a really good trade again. And right here you hit your target, which is a 5-minute fair value gap that you were targeting. Really good trade here. V signature, which is in my opinion the best possible confirmation you can get order flow wise on the 1-minute, 2-minute, 3-minute chart, and really nice. Let's keep going. I just went to the next day open right here. So we have a buy side liquidity pool, so those equal highs plus that sell side right here. We have a gap sitting above us on the 15-minute chart, so those highs are in play for a reversal if we reject them. And also right here we have a 15-minute fair value gap, so those lows right here, if we do get a rejection, this 15-minute fair value gap will be in play again for a potential reversal. So let's see what it does once one of those extremes get taken out. So right here we do take out this sell side liquidity level. and we have a 1 minute fair value gap, no 2, no 3, possibly a 5 here. So boom, this is where we push to the upside, and we can also see that we have an unfilled 15 minute fair value gap. So once this candle will close bullish, we will most likely run up back towards this gap right here, which will act as a magnet and as our draw on liquidity. Here I can see that we have an unfilled 15 minute gap, which will act as my draw on liquidity. So we are sweeping sell side, closing back bullish, plus we have unfilled gaps above us. So right here, we'll look for potential inversion play here if we can. Boom, this is where we get the inverse. I will then go long, targeting this unfilled 15 minute gap right after sweeping sell side. A lot of people will try to go long from here, trying to chase that play, but looking for extra confirmations and an internal gap to be created is better in this case. So I will target this unfilled 15 minute bearish fair value gap here after the sell side sweep. Right here, let me go long on the limit order. So I get filled here, and in 2 minutes I hit my target, so really nice. Right after I took that long right here, we just swept that buy side on the 15, which is really good. So if I see a potential short from that high, I will take it. So let me take a look at what's going to happen right here. So we have no gaps here on the 1 minute chart. I will go on the 2. We have a singular gap right here, which is really good. Wow, so this is a really good play. We cannot close a singular handle above the buy side. Right here, we swept an internal high plus the highs to the left that led into this 15 minute bearish fair value gap. We can't close a singular handle above the high, and we created that V signature confirmation, which is the fourth candle after creating the fair value gap that disrespects it. So we have a really good confirmation that price is most likely going to go lower. We can put our stop loss right above this candle's high and target the most recent low for a 1-to-1 risk to reward ratio back to the downside. Let's take a look at what's going to happen. I'm going to enter market right here since the confirmation is way too good. And as you guys can see, again, in a few minutes I hit my target. So really good play here. 15 minute buy side liquidity sweep into this gap, can't close inside of it, so above it, then we react towards the downside, inverse this gap, and then we see a move back for a 1-to-1. Right after you take 2 trades in a day, you shouldn't look for something else. So this is where I would go to next day open and look for another possible opportunity. So right here we have a 15 minute fair value gap just below us. We have also an internal sell side liquidity level right here, and we have those 2 buy side liquidity pools. So I will wait for those extremes to be hit. So we sweep this low here, and we have a nice 1 minute bearish fair value gap. So if I disrespect it, this is going to be my confirmation that the buyers stepped in inside this 15 minute gap and are the one controlling the market, and the bears will be squeezed if we can close right above this line right here. So now I will look for an inverse fair value gap. This is where I get it, so I will go long right here, stop loss right below this low, targeting a 1-to-1 risk to reward. I will target this internal high right here. So I can enter market on or limit order right here. I get filled on the limit order, and in a few minutes I hit my target again. So really good play here. 15 minute liquidity sweep inside this 15 minute gap, then we see an open low, drive back to the upside. This 1 minute fair value gap didn't hold, so we have the confirmation that the buyers are the one controlling the market and that the sellers are being squeezed. Not gonna look for anything else right now. I'm gonna go to the next day open. Yet another opportunity right here. We sweep this internal low back inside this 15 minute fair value gap. Then we have a 1 minute V signature right here. So we have 1, 2, 3 candles forming this bearish fair value gap. And then if we're truly bullish, we will disrespect this bearish fair value gap. So if we were bearish though, we would have respected this zone to create a new low. But right here, this is not the case. So this is where I would go long. Stop loss right below this low here, and I will target a 1-to-1 risk to reward. So right here, I will enter market. And in a few minutes, I hit my target yet again. So on the 15 minute chart, you guys can see This is a 15-minute fair value gap, a open low at 9:30 open right here, and then a flip above the opening price, which solidify that power of 3 model on the 15-minute chart also again here. So we then tap this 15-minute fair value gap. Let's see what happens right here. We have a 2-minute gap right there. If we can disrespect it, I'll go in. So right now, this is where we disrespect it. We tapped a 15-minute gap plus the order block. We are going higher on the 15. So this is where I will go in on this 2-minute inverse, stop loss right here, take profit right above those highs here. We have also low resistance liquidity run sitting right above us. So this is where I will try to take my long entry from. Market. Oh, price holds here, unfortunately. And yeah, my stop loss gets hit. Unfortunately, this is my first loss in this session using the same exact framework, so I don't really mind. Now that we are done with this backtesting session, let's take a look at the stats. We made a total of $6,048, so 120% of the account in only 15 days by risking 10% every single trade. So we went from an account balance of $5,000 all the way to an account balance of $11,048. We had a 92.31% win rate, a total trades of 13, so we won 12 and lost 1. For the RR summary, we can see that we had an average RR of 1.11, which is what I'm usually looking for. We had a total winning trade win streak of 12 and a losing streak of 1, which is really good. So this goes to show that you don't need to overcomplicate stuff. You can make some money with a super simple system. Just make sure that you guys go into the market looking at the same thing every single day. Don't look to your left, don't look to your right. Make sure that you have one framework and you stick to it. Don't listen to other people. Make sure you use a strategy that fits with your personality and lifestyle. That's the most important aspect. No one cares about high RR or low RR. Make sure you find something that works for you, and that's it.